Hello friends, how are you? Welcome back to my channel He Rocks, and this is Hirok Talukdar. Today I came back to you with a new topic, Public Provident Fund or PPF. As you know, a few days back central government has changed the interest rates of PPF and some rules and regulation. Today we are going to discuss starting from the basics of PPF. You know, what is PPF, how to open a PPF, to what are the interest rates of PPF, and what can we gain out of PPF, and how can we maximize the return from PPF. Everything from start to end we are going to discuss today. So please hang on with me, please be patient, and let's not waste any time. Let's go ahead and go on for the discussion. So the first thing is basics. So we will discuss the basics of PPF. So basics of PPF is what? So PPF or Public Provident Fund is nothing but an account which can be opened at some post office or at some banks, and the interest you get from the PPF is absolutely income tax free, as well as till 1.5 lakh rupees if you save in your you can put in your PPF account per year, and that comes under 80C exemption of income tax. So basically 80C exemption of income tax will save your income tax from your total income or taxable income up to 1.5 lakhs, and there is a limit of 1.5 lakh also, that maximum 1.5 lakhs you can put into your PPF. So income tax, as I have told you, that whatever investment you do into your PPF, that is comes under tax exemption of 80C. So you don't need to give any income tax. And also when your amount matures, you get your principal amount and your interest back, you don't need to pay any tax. It is absolutely income tax free. The next very popular question it get asked is how many number of PPF accounts I can have. So let me clear it for you. One person can have only one PPF account, and you cannot have more than one PPF account. So legally you can have only one PPF account per person. The next question, very popular question, what is the lock-in period of PPF? So the generic lock-in period of PPF is 15 years. So it's a long-term investment. At least for 15 years your money will get locked, and after that you can get it. There are few exceptions that you can get your money out earlier also, but in that case there will be monetary loss. But today's topic of discussion is how to maximize the gain. So I will not go into that. I will go for the nominal thing, or I will go for the regular thing. The regular thing is for 15 years you have to put your money into the PPF account. So the lock-in period is 15 years, and after that interest credit. So on which day the interest get credited, you can put money into PPF account from 1st April of a financial year starting to the 31st March. Whenever you want, you can put the amount, and the maximum amount can be 1.5 lakh, and minimum amount I think 1000 rupees. And at the end, on the 31st March, the last day of financial year, your interest get credited based on that year's investment and the previous year's accumulated amount. The total interest get credited into your account on the 31st March. Now this is a very interesting topic I want to discuss with you. Everybody doesn't know it. How to maximize return. So how PPF calculates the interest is, if you invest any money after 5th of any day month. Let's say you are investing money in April. So 1st April, 2nd April, 3rd, 4th, 5th, on these days if you invest money into your PPF account, so then the institute or the bank consider that amount is there for the whole April month, and after that, for that month's interest, whatever amount you put into your account, PPF account, you get the interest. But after 5th, if you put the amount in your bank account, let's say on 6th also if you put your amount in the PPF account, you won't get any interest for that month. So in April 6th, if you put the amount, you won't get any interest for April. From May only you will start getting the interest. So my recommendation would be, whatever amount you can put in your PPF account, put from 1st of the month to 5th of the month. From 6 to 30, it's better not to put any amount into your PPF account. Go for the next month from 1st to 5th. Again, you can invest in your PPF account, and rest of the time you can keep your money into your normal bank savings account so that it will accumulate some interest out of it. So to maximize return, you have to invest your money into your PPF account from 1st to 5th. Next thing comes in interest rate. So it's a little historic data I have plotted. So I have started from April 1, 1986. So it's almost 34 years back, more than my age. So at that time the PPF interest rate was per annum 12%. From that it slowly decreased, and again it got increased a little bit here at some time of 2018. Again kind of it decreased, and in between also it got increased for sometime in 2012 sometime, and again now it got decreased. So it's just a historical data. So you can see here the dates are there, here the interest per annum is there. So it started from 12%, it went down to 9%, slowly it went down to 8%, it again went back to some 8.8%, 8.9%, again come back to 8%, then again it goes to some 7.7 or something, again come up to 8%. It was 7.9% till 31st March of 2020. On April 1st, 2020, central government has suddenly decreased it to 7.1%. So this is just to give you, just to give you a background, or just to give you a historical rate of return from PPF. So it has varied from, let's say, 12% to 7%, but in recent years you can consider it to be 7 to 8% only. So those 12%, 10%, those days are long gone. So this is just to give you historical data. You can slowly go through this table also. You can pause the video and see that what was the historical interest rates of PPF per annum in early days. So next thing is yearly investment versus monthly investment. So basically you can put your money into your PPF account. The maximum limit is 1.5 lakh per annum. The minimum limit is 1000 rupees per annum. So you can put it at once, or you can put it per month. To maximize return, obviously you have to put 1,50,000 rupees to get the most out of it. So I have considered that, let's say one person put 1,50,000 rupees from 1st April 2020 to 1st April 2035. So for 15 years that guy puts 1,50,000 per annum. So till 2034 he will put, and on 1st April 2035, after 15 years, the PPF will get matured, the lock-in period will end, and that person will get the whatever the accumulated amount with the interest back. So I have considered the per annum interest rate of 7.1%, which is the recent interest rate. So you can see here, every year on 1st April, one person is keep on investing 1.5 lakh rupees, and this is the cumulative amount of principal plus whatever the investment of this year plus the interest on the previous year investment. So if you keep on doing this for 15 years, so at the end for 15 years, if you put 1.5 lakh rupees, you will invest totally 22.5 lakh rupees into PPF account, and at the end you will get a 40 lakh 68,200 around amount out of it. So your overall, not per annum, please remember, your overall gain is almost 80.8%. So here I have shown you that per year we are going, and here from the first year to 16th year I have shown it. So how you are kind of getting, or your cumulative amount, how it is increasing, I have shown you as a graph. So next thing is monthly investment. So what you can do is, you instead of putting 1.5 lakh at once on the 1st April, you can keep the investment of 12,500 per month. So in 12 month you invest 1.5 lakh. Okay, so for the maximum return. So now the rate of interest per annum is 7.1%. So if you go for a complex return calculation, so then it comes to be 0.57% per month. And so what I have done is, I have considered one guy invest 12,500, or one person invest 12,500 from 1st April, again 1st May, 1st June, like that from 1st April 2020. So it's a pretty long table. So because in 15 years it's come to be 180 month. So in 180 months he invest each month 12,500 rupees. So overall investment is the same as yearly investment, which is 22 lakh 50,000 rupees. And on the 1st April of 2035 his account kind of matures and he gets this amount out, which is 39 lakh 43,068 rupees, which gives you overall return of 75.25%, not per annum, overall. Please remember. So here I have shown you a graph that in per month you are investing, and this is the cumulative amount, how your investment is kind of increasing with time, considering 7.1% return, which is subject to change. Obviously in future they can change it, but overall you can get around 39 lakh out of it. So the next thing comes to be the comparison, yearly basis versus monthly basis. So total investment, if you invest 1.5 lakh per annum versus 12,500 per month, first thing is yearly for 15 years and monthly for 180 months, again 15 years. So you will invest totally 22 lakhs 50,000 rupees. So there is no difference. But when you will get the return, you will get around 40 lakhs 68,000 when you are doing yearly basis investment, and 39.43 lakhs when you are doing the investment as monthly basis. So there is a maturity amount of difference of 1,25,000, which is quite large. And the total gain you are getting if you do yearly investment lump sum altogether on the 1st April to 5th April, that time period, so you will get a 80.8% return overall, but monthly basis you will get a 75.25% return overall. So there is around 5.55 or 5.56% difference in the overall your maturity amount or maturity total gain. So this is just to show you that even if you can invest the same amount yearly or monthly basis, it is always advantageous to accumulate the whole amount in a year and invest it on the 1st of April to 5th of April of the next year, which is the next financial year starting. So that's the message I wanted to give you. So I have covered the basics of it, the interest rates, historical data, what are the norms, and few frequently asked questions about PPF, and the yearly basis investment, how can you maximize the return, and monthly basis investment, and a comparison in between yearly and monthly investment, and show you the difference in return. So thanks for your time. Please let me know your queries in the comment. Please like this video, share this video, and let me know in the comment section also that if I need to improve anything in my videos. And thanks for your time. Please subscribe to my channel, and I repeatedly keep on saying that it gives us faith from your side, and it gives us courage so that we can make, or people like me can make more and more financial and other topic videos and present them to you. And thanks for your time. Hopefully we will meet in near future. Thanks. Bye.